I'm going to make the case that small caps are going to outperform here.
Oh boy.
So I'm going to.
That's great. I'm going to make the case that IWM is going back to the bottom of the range. So it's great for the people. They can do both sides. Let's do it.
Hello, everyone. Welcome back to another episode of Trade Risk Live. I am joined by the man, Aaron Jackson, once again. Aaron, how we doing today?
Doing all right. Oh, man, I love it. Trade Risk Live on tape delay. What could be more exciting?
That's right. Did you get any snow today? Were you out there shoveling? Were you one of the poor souls getting buried?
Nope, not this year. Not this year. It's wild, man. There is nothing.
Yeah, I was out putting out some of the old snow melt, trying to get prepared, and there wasn't a single flake that dropped on my neck of the woods. So I was happy, but I guess it's getting a little bit colder.
Oh, we got dumped on today, though. Don't you worry about it. Oh man, what a nasty market day, huh?
We did. Yeah, I think that's where we should start, because this is a pretty knee-jerk reaction day. Of course, it was off of the heels of this hotter than expected CPI report with shelter and food, really causing havoc in terms of this disinflationary process, perhaps. So let me start with some charts here. I just want to set the stage a little bit on. So we're recording this, if you're watching this after the close on February the 13th. So the S&P 500 finished down about 1.37%, a little bit off the lows here. The NASDAQ 100 was down about 1.56%. So a little bit of a knee-jerk reaction here. Heavy volume traded. Some stocks getting cream. The Russell 2000, of course, down 4.11%. So there's a couple of ways to look at this, and I want to get your thoughts on what changes after today, because we got, of course, we got the CPI number, and so if you want to comment on CPI number, I'll let you comment on it. But
it's rigged.
It's rigged. All right, so there it is. You heard it here first. But we did get a big market reaction. Now, I don't know, you could say it was CPI, you could say it could have been anything else in the room to spook the market enough to cause us to sort of reset some of this froth. But when we look here at the S&P 500, I mean, we're back to levels seen 5 days ago, right? 4 or 5 days ago. So yes, we had this big move, and I could certainly point some evidence and make the case that this is the start of a 1, 2, 3, 4, 5-week pullback, right? Every pullback starts somewhere, right? So like this could be the logical spot. Or do we think, we are just going to see this eaten up like we saw back on the end of January, right? January 31st, we had this vicious sell-off in markets, and there was no follow-through. Buyers came right back, and off we went to new all-time highs. So what in your mind, does this change anything? Do you look at the market differently after today's reaction, or not?
Well, if we're just talking about the S&P, like the hilarious thing was, end of the day, these algorithms, the computers, the volatility is going ape shit. And actually, SPY, NASDAQ 100, they bottomed at the 20-day. That's all it was a test of the 20-day moving average so far. So, I mean, that's kind of interesting.
Yeah, it's pretty garden variety to kind of check back to a 20-day moving average, right? Or to even in the healthiest uptrends. This is where stocks often find support and ride, the wave higher, basically, right?
For sure.
Okay.
But in terms of view on the market, it's manage risk is the good view. That's a good view.
So so I'll show one chart and then we'll switch over to yours.
Cool.
One of the things that did change today, and actually I didn't even refresh this. Where are we today? So if we look at, again, and I'll get your thoughts, if you care about this, but if you look at what the market is implying yesterday versus today in terms of future Fed rate cuts, in this case, we now see that the May meeting from yesterday, right, probability was like a 52% chance that they would cut 25 bips in May. And now after this print, you see those probabilities went down to 32%, and staying kind of where we are is now two-thirds chance. So, I mean, this is the ripple effect in the knee-jerk reaction, sell-off in equities, the dollar breakout, right? The rates move, right? This all goes hand in hand. So this, I feel like, is what's being recalibrated right now. I guess we'll call it that.
Yeah, no, that's great. The rate cuts are they projecting now? It was like 6, 7, or whatever nonsense they were trying to say, right? What about now?
And I mean, when we came
like
in
2,
I think so, right? And when we came into the year, right, we were talking about a March rate cut, right? So everything's getting, basically prolonged at this point, yet the market is still ratcheting up, and up.
Well, I think the closer we get to like 0 on that, that's great, because whatever the hell they were doing earlier, that's just all nonsense, right? It's just people try to make an indicator out of something just because it seems a little complex, a little mysterious, right?
Yep.
Who cares? No, I don't think anyone really takes that serious.
So it's kind of good in your eyes that you get those expectations just flushed out, basically, right? Like,
I think so, yeah.
Let's look at some charts that you got here. So I got your chart up here of, you're gonna go right to it, huh?
Let's do it. Right to the NVIDIA. Okay. Right. So coming into the week, well, let's go back long time, right? The 21 top to the 22 low in NVIDIA. You put a Fibonacci extension grid on it. Interestingly, last summer, stopped right at the first Fibonacci target. And then you can see that thing held on for months and months and months. Yep. And then, you finally get the breakout, and here we are at the next one. So if the last one worked so damn well, why wouldn't this one be at least relevant? Why wouldn't other people looking at this same thing start selling up here? So it's like, why would you be long NVIDIA up here? Like, it's been a great trade. It was 450s, 460 in December. Mm-hmm. And then, of course, Nancy came in and bailed us out. She bailed us out. And here we go, plus 50, 60%, just like that. So,
50% up.
A nice trade. Trade's over.
50% up into trends over. Okay, so some big statements here. So earnings haven't been out yet. I don't know. NVIDIA still a couple weeks, right? Next week. Okay.
Next week or 2, yeah.
Yep. So when we think about, right, and anything can happen, of course, right? We don't know what the future is going to hold. They could have obviously blowout numbers here, but what you're saying is the reward to risk is not your friend at this point, right? Not after such a rally, not after such a run up, and probably tough comps, or I don't know if the tough comps are hitting yet now, but that's kind of this is a tough spot to still want to be kind of a bag holder is your takeaway.
Yes, people are selling to potential bag holders as we speak. Yes.
Okay. Yep.
But I mean, it was a good trade, and watch. There is a world in which this just goes down a little bit, and then it's like, oh, we're still in a blow off. Is it likely? I'm not betting on it. I think anyone who caught that trade can just sell here and just sleep at night well and just be like, whatever happens, happens. One interesting aspect from today that we got to talk about a little bit was, this morning there were a lot of stocks trying to go red to green, but the underlying characteristic of all of them was momentum. They're in momentum funds. They've already had momentum funds. The momentum funds are buying them, right? And like, we can pull up Abercrombie and Fitch, Wingstop, whatever. So many stocks that have just gone vertical for so long that no reasonable person is buying here. They were red to green today, right? It was just a full on, I don't know if it's retail, I don't know what, but it seems it's all momentum funds. And every day that NVIDIA is no longer going up, that momentum calculation, they're more likely to fall out of the graces of any momentum fund, any momentum trade.
Hmm. Interesting. If you are a reasonable person buying Wingstop today or Abercrombie and Fitch, leave a comment below. Let's take it to Aaron. Let's see if you're a reasonable person buying for some reason. Let us
Well,
know.
that Abercrombie and Fitch breakout is a hell of a breakout. You should
Okay.
do that thing.
What are your thoughts on, so when you talk about NVIDIA, is that its own story? Does that translate to just the other, we'll call the Mag 7, right? Like, does that translate over to some of these other stocks, or you're looking at something kind of specific here to NVIDIA and its big run?
I mean, it's hard to believe there wouldn't be, some tie-in, right? But
Right.
getting anything more than just focus on the single stock seems to be
The
the way to
easier
go
play
here.
yeah, the easier
Uh,
play to make. Okay. Yeah, no, that makes sense to me. I mean, if we look at, say, the NASDAQ 100, again, we talked about it, 1.56% down, heavy volume today. In the very, very short term here, I mean, I'm always a fan of just looking at those prior highs and swing points, just because I think they're good reference points. But for me,
oh yeah.
we got a gap down, that open gap that didn't quite get filled today. And we're kind of now sitting underneath this prior level, these prior highs in late January. So I would be, at least paying attention here. I'd be waiting for that second day, right? Like anytime a stock or a market makes that big move, you're kind of waiting for that follow-up day. Like, what's the action after the dust has settled and people, get 12 hours of sleep and digesting the big move, and how do they come back and follow things up? So where do we want to take it next? You want to talk about Bitcoin?
Yeah, let's do some Bitcoin.
All
More
right.
fundamentals. Let's go.
Well, I don't have any of the funny charts for you today, unfortunately, but I do have I got kind of just going to reiterate this same theme, and I want to get your thoughts. But I mean, this Bitcoin weekly chart, I've been posting about this. I've been talking about this in sort of the stock market weekly updates that I do on Friday. But it continues to be still my favorite idea, bet, position for I don't know, the foreseeable future. Of course, my expectations change, right? Obviously, with day by day information, but this range here, right? This was the big range and level I was looking at for a while. I think everybody was, and we finally got that confirmation out of it the other day. We got that breakout out of it, so we had a nice tight range here for Bitcoin. And last week we of course got that surge up, and we sort of tagged 50,000, and we're settling, right? We're digesting. If we look at the daily chart here, this of course sold off today, and has
Some buyers.
found some buyers, right? So
Big day tomorrow.
there's a good fight going on here. I still believe that the biggest catalyst right now is still the ETFs. I think we are still, and there's a lot of smart people on Twitter that are tracking, or X, that are tracking those net flows every day, and we're still getting a nice kind of steady trickle in of net flows coming into Bitcoin. And once again, just to reiterate, I mean, for this market, this is a new set of participants. Maybe they're traders, maybe it's hot money, right? Who knows? But there's new demand for Bitcoin that did not exist prior, right? These are folks that are likely not willing to open up a Coinbase account, not willing to write down a bunch of words all over their wall and bury it in their backyard, right? Like, these are folks that just want to open up their Schwab account, click the buy button, and own some Bitcoin.
That's right. They see the U.S. fiscal situation. They're like, oh shit, the math doesn't add up.
I still think that incremental, right? Because we know prices are set on the margin, right? And so we know that with this incremental new demand here, it doesn't mean that it has to just totally rip off to the races. But you said it kind of the way I'm thinking about it, is that you at least have some type of bid here in the market from these new participants, this pent up demand that folks have been waiting for. or even natural, natural Bitcoin participants that have had Bitcoin for a while, but now want to get it in an IRA account that they can now access in a, SEP IRA or a traditional IRA and their brokerage account, right? Like those folks are now getting their exposure here. And so I do think, I think that's the big catalyst. So when I look at it from a price perspective, again, to me, I mean, 40 above 45 to that 47 level is the big level to me. I know you're looking at, say, that 61.8 retrace around 50.
Yeah, that's right around the same level.
Right around the same level. And so for me, I mean, we are sort of, we're above it. We're trying to, we're in the process of trying to break out right now. Now today on a risk off day and a tough day on Fed expectations and all that stuff. Now we're starting to fight some of the macro headwinds. So we're going to see how it does here. But generally speaking, I mean, when I look at this chart, yeah, it's long in the tooth for sure, but it's making its way. It's covering a lot of ground. And I am still of the belief that price can move pretty quick. And I think there's going to be a magnet back up to those former all-time highs.
So the short way I'm putting it, just short, simple way for people, you establish Bitcoin above, if it gets established above the 50K, you're looking for what, 60, was it 65? The first top,
yeah,
one was 69. And then moving forward, if we can establish above 50K, then you're looking at 50K as your new price floor, basically.
Yep. So, and yeah, I mean, you look at a 1-year chart, right? I mean, look at a 1-year chart, you're starting to get above all those prior closes. Again, that's a very, very long-term kind of weird view to look at it, but those yearly closes.
Never seen that before.
Those yearly closes, you're starting to inch up. So it's interesting. The one last little piece of Bitcoin trivia I'll give you, which I think also plays into some of the psyche here, is since 2018, so let's call it over the last, what is that? Do quick math, 7 years or so. Bitcoin has had 3 drawdowns of 70%, 77%, and 82%. I mean, it's had 3 rip your face off, sort of meltdowns that have just been really beating holders up. And so, yeah, the stage feels fairly set here. So I still like it, still long it, and we'll see. I'm going to continue to track it, but I've been beating that drum now for some time, and we'll see if we can start clearing over 50K and holding above it for a few days. But it looks like it's moving. So
I've got US dollar.
Okay.
US dollar. We want to talk about strong currencies. Hey, maybe Bitcoin and US dollar are just 2 of the strongest currencies in the world. Maybe. I thought it was pretty notable today. US dollar ripped right back above the 104. I've been watching that 104 for quite some time. You can see, obviously, it's in the middle of some chop right now, but definitely keep an eye on that dollar 104 moving forward. And then, I don't know if I have it here. We've got the gold and silver index. Dollar goes up. Oh yeah. Gold miners be breaking down. Wow. Look at that piece of shit asset. My question for you is, what do we make of this dichotomy? I guess you could say, hey, step into the gold miners right here and just be a hero. But what's up with this dichotomy between the Bitcoin and gold and silver, especially gold, just a non-participant?
Yeah, gold just really, I mean, I don't know. I mean, you nailed it at the beginning. I mean, that dollar is a wrecking ball. I mean, gold really seeing a rough breakdown today. Where is the dollar? Where's the dollar on its path to? Where's it going? Right. And
right.
To me, that's an interesting question. And so I think that's going to drive a lot of this, but I haven't looked at correlations of Bitcoin and silver and gold and all this in quite some time, but,
well, I do have one theory for you.
Let's hear it.
Yeah. So you know who owns a lot of gold?
Who owns
Russia and China. There's talk that Russia is actually selling their gold because they need to buy chips and drones and to advance their war effort. And it makes a lot of sense, really. I mean, if you really want to look at it between, chips versus gold, and that makes a lot of sense, I think. So that's an interesting thing. But then so at some point you would think that means gold is going to start trading with Bitcoin, but it beats me.
Actually, no, you got nat gas up. Let's hear about nat gas.
I do.
Okay.
Man, I've been sitting here wondering, why can't these energy stocks hold the bid? What is going on? And obviously, when you look at the chart of nat gas, it's been halved since, my God, since November.
Every 30 days.
Yeah, the halving comes. Yeah, in the last. Is that right? In the last month, it's been halved. Yeah. Anyways, I think we're going to have to buy some nat gas around here sometime soon. Now, obviously, this 1.5 area, 1.6 that's a floor, and my God, there is some momentum working against you. You definitely see a little firming, some sort of, at least any sort of time frame, some sort of flip of momentum. But man, that is quite the decline in natural gas, is it not?
It's epic. I mean, I remember seeing that. Yeah, I mean, I remember looking at this thing at the start of the year, right? One of the worst performing commodities in 2023, and then this thing just ripped out of the gate. That first 2 weeks of 2024, up 30% or whatever it was, and in spectacular natty gas fashion, as it always does, just totally falls from the sky and starts making new cycle lows. So yeah, this one, I mean, there's blood here for sure. But I don't have the stomach for it. Which is probably why it'll work. I mean, that's exactly
at least you'll still have a stomach. My God,
I guess.
You could step into this thing and who knows, maybe it goes negative. I mean, they've been flaring it off for years because we had so much of it.
So. Right. What else do I have? I mean, I'm going to switch gears back to equities.
Do it.
So the only thing, and this will make your stomach start to turn. I'm going to make the case that small caps are going to outperform here.
Oh boy.
So I'm going to.
That's great. I'm going to make the case that IWM is going back to the bottom of the range. So that's great for the people. They can do both sides. Let's do it. Let's make the case.
Put me in the check mark of another person calling for breadth expansion and small cap outperformance. So I made this case actually in my last Friday. So today clearly is a little bit of a kick in the pants, but I'm going to make the case here that down 4% today, heaviest volume it's seen, pretty ugly individual session, right? Going to go all the way back.
Wow, look at that. That is competition type stuff here.
Yeah. So you've got pretty much the heaviest volume traded in the last, I mean, hell, almost entirely on this chart. I mean, wow. I guess you have a day here in 2022. But you had almost 86 million shares trade hands here. I'm sure some of those numbers will get finalized. It's basically, pretty intense. So when I look at it, I mean, you basically gave back 3 days worth of gains. Again, it's a cheeky way of zooming out and looking at it. But for me, I'm simply looking at 190, 188, somewhere in here as I'm wrong on this trade. I think that this base, this range that it is trying to carve out here at the top end of this 2-year longer range that it's been in for seemingly ever, I'm still looking at as constructive, although I am, again, holding my breath after today's drop. I made this. I'm going to stick with the case I made 3 days ago. So
that's right. Never change your opinion in the light of facts.
That's what we're teaching here. So no, I'm sticking with the original kind of 188, 190 level. I'm going to go down on that. Now I don't have. So here's the only, I guess, wrinkle I'll put into this. I don't have IWM outright exposure. I don't own the index, but I do own essentially a lot of individual stocks in this index. So it's kind of a cheating way of saying I am trying to pick out some of the stronger names that are falling in this market segment, so to speak. So your mileage will vary, I guess, depending on what you're actually owning here. I don't own the IWM, but I do own a lot of stocks that I'm seeing progressively start to set up, firm up, and act better. And so that's kind of the bet I'm having. So we'll see. Now, part of that bet was saying, okay, the dollar's not going to do a whole lot. That might help my case. And of course, again, today was clearly a move in the wrong direction all around. But you have a different view. So I want to hear, your view.
Well, I mean, I like your point of view. If it's based on stocks, if you're going from, look, if you're going from the bottom up these days, it's way better than viewing a market or anything from the top down, because that's what people do. But I don't know, it just seemed very interesting. It seems like pretty clear, well-defined range just in 22, 23, granted, 205, 206, 200, whatever. That's also the top of the range. But the small cap, it's just been deteriorating for so long. And then today, another rejection at the top of that 2023 high. Another fake breakout. It's just like, man, I guess it does depend on the breadth expansion, and the chance biotech can really turn it around. You can have some good news coming in the sector. I think it kind of depends on that, but man, if it's not going to break that range, that's tough.
All right, so here we go. We've got our first bet then. So let's see what happens first. 210 IWM or 180 IWM. I'll say 210. 7% up, 7% down from where we currently are. And you would take the down on that side.
I'll take the down.
Okay.
Oh yeah.
I'll take the up. So let's follow up on this trade. Let's track it. I don't think. Are you short it? Are you short the IWM outright or no?
I wish.
Okay. Wish.
But no.
We'll see. We'll see how this continues here. Okay. So that's pretty much all I got. I mean, those are the two ideas. Bitcoin is my top idea. I mean, the small cap is just where I have a lot of portfolio exposure, I suppose. But again.
All right. I got a couple more. I got a couple good ones real quick here to close this out. In the last rotation report over the weekend, I was talking about the new issues, and we're finally seeing some IPOs, right? And okay, who's going to benefit from it? I don't know, major banks, maybe Goldman Sachs. We thought, hey, Goldman Sachs is kind of at the top of this range. Seemed like maybe it was going to try to make an attempt to break out. Today, smackdown, ends up closing the day, holding the 50-day moving average. That's something I want to watch, because if the panic just recedes, we can go back to, more new issues hitting the market, kind of maybe, we'll see how that goes.
Okay.
It's more just, hey, I'm going to be watching this for a tell, because, I mean, honestly, who knows? It could go any which way. And then we got S&P 500 value versus growth, which, man, I've been watching this chart for a long time. And the blue line, it's the 200-week moving average. And you can see, like, for a long time, it's been respecting that 200-week moving average. And finally, 23, we got back above the 200-week. And it's trying to establish, again, above that 200-week moving average. So say things are going, and the rates are going higher. The dollar goes higher, and that's bad for your growth stocks. Well, obviously, value versus growth is going to bottom out here and probably turn up. So definitely something to watch moving forward.
That's a cool chart. Yeah, I like that one. What else you got? Anything else?
Oh, let's see. Oh, they wanted to compare this to Volmageddon. I don't know, but what happened? Thing we were talking about, hey, it's kind of a panicky day. I didn't see that small cap volume. That really looked like some capitulation kind of volume, didn't it?
Yeah, sure did.
But the fear ratio, it's just short-term vol versus 90-day vol spiking.
Yep.
Granted, it was spiked a lot higher with about an hour left in the trading session, but it's good to see some fear in the market.
Absolutely. Yeah. Shakes it up. Needs it. I mean, we needed it. We needed it. I mean, the last 3 months, out there have just been 4 months, 5 months almost now. Sheesh, time flies. I mean, it's just been as good as it gets. I mean, in terms of things working. And so, look, a little bit of volatility, a little bit of fear, a little bit of shakeup here. I mean, I'm here for it. I think it's good, especially as traders, gives us better, entries and opportunities in a lot of individual stocks. But yeah, I like this chart too. Nice fear ratio there. So we're climbing the wall. We're climbing the wall to fearful.
One thing to add at the end, it's just if you don't have an edge, like, it's okay to do nothing and let everyone else make massive mistakes. And that's where your edge eventually comes from. Everyone else doing the wrong thing, right?
100%. I love it. I think, it's one of the things I always feel like I give out the most for advice is like, just because you're a trader does not mean you have to actually trade. You don't have to push buttons if there's no actual edge setup opportunity, right? Like, and that's one of the hardest things I think people need to learn or have to develop over time. So well said. I think that's very appropriate. So after a day like today, where we get this big knee-jerk sell-off and just change of direction of momentum in lots of these stocks, take a beat, wait for a couple of days, right? Let things set up. Obviously, whatever your setup, your strategy, stick to that. But
that's right. Like today on StockTwits this morning, I was just posting ideas I'm adding to the watch list. You had a nasty sell-off in the growth, so you look and pick through the growth stocks, see what isn't damaged technically yet. You see what's not. Still looks all right. Still hasn't trapped a lot of people. Just that type of thing. And then, you could trade it or you could wait, and just depends on your strategy. Like, just things to keep an eye on.
awesome.
All you can do.
That's all you can do, one day at a time. Where can people find you? Where should they go? Rotation report. Where do you want them to go?
Yep, rotation.substack.com, or you can find me at the Money Charts, ATM Charts on StockTwits.com.
At the Money Charts on StockTwits. All right. Links in the show notes, everybody. Thanks for tuning in to another Trade Risk Live episode. Let us know your thoughts in the comments below. Hope you had a good, safe day of trading out there. Aaron, thanks so much. See you back in a future episode. Take care, everybody.